David, we got to talk some gold, because since about as long as I can remember us having conversations, you've been long gold. So 1900, time to take profits, or is this party just getting started?
Hey, Oliver. Thanks for having me. I actually think the party is just truly beginning for gold, and it's going to be a new bull market that's going to last for several years. And I think that's the dynamic that's been playing out for the past 24 or so months when we first started investing in the gold space for the first time ever at Livermore. And it looks like the runway ahead looks really clear.
Does gold ever need a number of inflation to justify it? Does gold need an event? I mean, I'm sitting here waiting. I've been hearing the inflation story for a year and a half from gold bugs, and the CPIs are showing closer something to deflation. I mean, there was like a period briefly last year where it was picking up, but after the crisis, it looks like this is all speculation that it's going to come.
Well, you have to remember the crisis brought on essentially deflationary forces when it first occurred, right?
Sure.
So that's going to play out over the next several months. But I think when you look at the amount of fiscal stimulus that's in the system and the deficits that are being built by by global growth initiatives falling off and central banks around the world easing, governments are going to have massive strain on their finances, and I think that's ultimately going to play a path here. So, as you just described, when you're looking at inflation, I think that's to come. And also, I think the other alternative is stagflation, which would see slower growth, and yet we'd see higher prices.
How do we gauge, though, and again, I think the case here is fairly compelling, David. We're obviously in unprecedented monetary policy. If there's ever time for a fine little pickup inflation, it seems like now. So to kind of even be more specific, though, I guess the question then is, if you're holding gold, how do you know, though, when the trade has come to its fruition? For example, if I hold Apple, like some of these analysts now saying it's fully valued, and I say, okay, Apple's here, I go my discounted cash flow, blah, 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 blah. I look at iPhone sales, it's time for me to get out, I take my profits. What are we doing for gold? Like, what CPI is time to get out, and what inflation print? I mean, how do we know?
Well, I think there's a number of things going on. So I think it's a bit different right now. So in the past, ideas we would expect escape velocity on the economy, and therefore inflation would pick up because the Fed, of course, was easing in the last decade, which has obviously caused asset prices to rally. This time, it's a bit different. Like I said, you've seen initial deflationary hit. You've seen all this fiscal stimulus hit the markets and the economy from government, and then now, slowly but surely, you expect to see a recovery, right? You'd expect to see growth, but to me, it's going to be slow going. And with that, I think what you need to watch is central banks as usual. So there's been a massive amount of stimulus put into the system. I think your telling sign would be as you would see reoccurring growth along with lower levels of inflation and the pulling back of some of that easing, and that might be your path to unwind. But personally, I don't see that for years to come. I think the deficit building that's been occurring is going to last, and we don't have a path to tax receipts that can cure a debt to GDP ratio for some time. So I expect, we'll come off the bottom like we're seeing in terms of economic numbers for the next few years. But I think ultimately you're going to hit a bump because I think you're going to have a tough time getting back to the growth rate that will keep up with the amount of deficit spend. And that's why you're seeing, the move to gold, and you see gold at 1,900, which is now, several year high, almost a decade high.
So, David, and I think this is pretty interesting, and I like that you're distinguishing here what you think is going to be the kind of fundamental driver, but also saying, look, from an if-then perspective, if these certain things of surprising growth happen without inflation, then that might be a sign for the trade to have run its course. So that's very useful. From a perspective of catalysts right now, though, how much of gold also gets the no alternative trade the way stocks do? Because gold has had this pretty close correlation to the S&P, well, more specifically actually for the NASDAQ. The gold NASDAQ correlation I've seen has been stronger than, say, gold Russell or even gold S&P. So if it's part of that TINA trade too, what about a scenario where there's just other options for investors? Let's say maybe the U.S. is still kind of stuck in this situation for a little bit longer, but the rest of the world picks up and you get a little yield lift off elsewhere, or you could put money in European stocks and get a return. Would that be negative for gold?
No, it's positive, because I think ultimately what you're going to see is you're going to see the U.S. dollar potentially lose its luster for the safe haven. And you're starting to see that actually since March. So the dollar was much stronger in March on the initial hit from COVID-19. Since then, it's actually gone into a slow, steady dive and obviously hitting lows, as you're seeing. So you're seeing the euro at high, you're seeing the sterling now 128 here today. And I think, like you just said, the path is, if you're seeing countries like Europe actually start to pick up, you'll get greater yield by moving your currencies to those havens instead of staying in the U.S. And I think that just doesn't happen over the next few months or year. I'm saying structurally that could happen over the next several years. And with that, you could see the dollar lose its king status, and then you would see rates move higher with bonds selling off, and you would see U.S. Equities, especially high growth equities that have been resilient to low interest rates for the past decade. Those would be the ones that would come under big pressure, and those are the ones that have those are the bubble stocks. So to me, I think today this is like the most dangerous game, and I think the next several years are going to be very, very interesting. You need to own alternative assets. You need to own special situations when you invest. And that's why we still like gold. We still like select gold miners, especially some of the small caps. We also, again, still like select energy plays as well. But I don't see any other path where I want to invest money for on my behalf at Livermore, or even for clients, where I'm comfortable owning stocks that are trading at very high valuation.
David, one more for you, and this may be a little bit out there. I don't think you're a big Bitcoin guy, but I know that being in the gold camp, you're familiar with what the Bitcoin bugs say. And there's a lot of overlap between what they want and what the gold bugs want. So if you kind of accept this baseline assumption, and maybe you don't, but I would say there's kind of a baseline here where gold and Bitcoin to some degree are kind of cut from the same cloth. But Bitcoin's kind of like a higher beta version of gold is the way I describe it, where there's a lot of things that have to happen for Bitcoin and their narrative. But to see BTC just totally go flat here, I don't know. If they are cut from the same cloth, should it make a gold bug worry if Bitcoin's not getting any of this love either?
No, I've never been a believer or speculator in Bitcoin. I've always said I think gold is the Romans' Bitcoin, and I think gold is where you need to be. It's been used for thousands of years as value, and I think today, given the fact that central banks are hoarding a bunch of gold, again, it goes and begs another reason why you'd want to own it. And Bitcoin, I think, is irrelevant at this point, and I think the market's telling you that. So I think it was a big speculative bubble in the past few years, and that's proving out today. Not sure what the future will hold for it, but my view is you want to own hard assets in this type of environment to have safety, and that's the only way to be safely invested today.
Do you think that gold is getting Bitcoin flows right now?
I think it's just starting. So I think if you look forward, again, I think I'm not trying to pinpoint where gold prices will ultimately reach. I'm just trying to focus on what is structurally going to happen in the economy and within growth. And then, of course, at Livermore, at the hedge fund, we're trying to focus on very specific opportunities, event-driven opportunities where we could take advantage of the volatility. We could take advantage of situations where maybe we could be an activist and really unlock value. And, today it's a lot harder because the landscape is a lot weaker for everybody. But as prices come down for a number of companies, you can see different things you can do in terms of restructurings or backing a company like this gold company, AEX, that we backed here this coming week that's going to list in London. There's a lot of things you can do in this type of environment to offset the slowness. And I think what's happened is you've seen this massive stimulus massive run towards you have to own equities and asset values. Ultimately, I think that's going to die off, and you're going to find out who has swimming shorts, as they say, when the tide goes out, as Warren Buffett always has mentioned.